will happen to the extreme. To the extreme, we will fail only. Okay, that only will happen. So we need to understand that failure is also a part of this game. Okay, when you come to a course like ACCA or CA, failure is also a part of this game. We need to understand that. We need to adapt to that reality. Because even I have failed many times. I have not failed in FM, but I have failed in AA. I have failed in papers like PM, and even in tax. I think I have failed. So I have failed 5 or 6 times. Maybe I didn't. I don't know that much time I have failed. It was back then, before 5 6 years. Uh, okay, that was the scenario. We didn't have this much of a wide variety of institutions and different faculties and all. We had only limited resources available to us. There isn't this much videos in YouTube. There isn't this much free revision sessions available. So we had that difficulty in our exams. So even I failed many times. I woke up at 6 o'clock and I had to look at my phone and see that I have failed in papers. That was a horrible situation. Even though later I came to know that these all are part of this course. Definitely, there will be failure. Okay, I haven't seen so many people who have cleared all papers in first attempt, or only very few. Okay, maybe 1 in 1,000 or 1 in 10,000. That much only people always pass at first attempt. So we need to understand that. Okay, do you know what is the pass rate of FM? What was the pass rate last session? Do you know?
Sir, around
What?
50%.
Around 50%. Last time it was 52%. Okay, but we need to understand that it's only a global pass rate, not a specific pass rate in India or a specific pass rate in a certain area or institution. It's a global pass rate. We need to consider other country people also. Okay, there are in most cases in India, the students fail due to the lack of knowledge in theory. Indians normally don't like theory and all. Mainly other country people. They are very good in theory. So it's equally, the pass rate is equally divided into all other countries. So it's a global pass rate only. We need to understand that reality. It's a global pass rate. Anyway, it's not an easy paper. It's a challenging paper, I would say. It's a challenging paper, and it's not something that is very difficult, but it's a moderate one, an average one. It's not that too easy also. We do have a wide syllabus compared to other papers like AA, PM, and FR. Okay, tax is always a bit more lengthier, but even though I would say this is one of the papers in which the syllabus is more wide. We do have a lot of equations. Maybe you can count up to 200 or 150 equations itself. There are n number of equations in which we need to study around 50, 60 equations. Okay, there are other equations also which sometimes you need not study, but there are equations in the syllabus. Okay, there are a lot of equations in the syllabus which we need to study. Anyway, you will be knowing that we will be provided by a formula sheet in the exam. Okay, there are certain equations in the formula sheet also. Okay, you'll be knowing that, I know. But
I
Revin,
know,
have you?
sir. Sir.
Sorry,
I know, sir. Former should video.
formula sheet will be there. Have you completed your mock exam?
Yes, sir, in my institute.
In your institute, you have completed.
Yes,
I
sir.
want all of you. Actually, I want you to write at least 3 mock exams before your exams.
Yes, sir,
You
written,
need.
sir.
Okay, you have already written 3 mock exams.
Yes, sir, yesterday only last mock written.
Yeah, that's really fine. Okay, how much did you
Yes, sir.
score?
First mock exam 56%, second 55. I think third will be 70 or 75 plus will get sent.
Yeah, okay, that's really good. Okay, you mean you wrote 200 marks or 60 marks?
No, no, sir, 100 marks, like real
100 marks,
exam.
real exam. Okay, fine. And that will be really fine. But you need to understand that the mock will be a bit more easier than the main exam. The mock exam
Yes, sir.
will be easier than the main exam. If you want good marks in the main exam, you need to score at least a score of around 60 plus. Okay, if you can continuously score a score of around 60 plus, then you will definitely pass in the main exam.
Okay, okay,
Okay,
sir.
that's the actually that's a reality. Okay, main exam is will be a bit more tougher than the mock exam always. I have seen students who are scoring around 70, 80 marks in mock exam, and sometimes they will also end up in failing in the main exam. So that we need to understand the reality. It's mock exam will be easier compared to the main exam. So we need to work harder anyway. Okay, it's not the time to settle. So that we got marks in mock exam, and we will think like, oh, I'm okay. Don't think like that. We need to score more in main exam, so we need to work harder. Anyway, I was waiting for some others also to join, but uh, there isn't many. So I would like to start, by the way. Okay, I hope they will join later. Okay, can you see the screen now? Is the screen visible to you? Could you please comment whether the screen is visible or not? Revin or Niranjana, anyone? Okay, Revin says yes. Anyway, let's start. We will be discussing about risk management today. Risk management today. I need you to comment, okay? I need you to either comment or just unmute and say. I want all of you, both of you, to participate in this question answer. Maybe it's like a question answer section, but don't worry. It will be okay. Even if you don't know, try to attempt it. Okay, those who attempt it, they will definitely will remember the answer in the exam. Last session, I had a student. She was really good. She used to she was not that much brilliant, but she used to try to answer all my questions, and she ended up in good marks. She got around 74, which was one of the top marks in the country. She wrote the exam. Unfortunately, she was writing in the second attempt. So earlier she sat in some other faculty's classes, and she wrote in the second attempt only, so that she didn't got any rank. Otherwise, she would have got some ranks. Anyway, I want all of you to participate so that it will be like a conversation only. Otherwise, I will be like getting bored. Okay. Anyway, risk management. In risk management, how many chapters are there in risk management according to your Kaplan textbook? According to Kaplan textbook, how many chapters are there? Could you please say? According to your Kaplan textbook, how many chapters, how many topics are there in risk management? Okay. I want you to comment, right? Okay, so try to comment. Anyway, there are two chapters. One chapter is named foreign exchange risk, and the other one is named interest rate risk management. Okay, interest rate risk management. Okay, as a company, we would always expose it to. Okay, if you are doing business in some other countries, we are a multinational company. We would always expose it to foreign currency exchange rate. Okay, that's a reality. Every multinational company, or if you are working, or if you are trading in some other countries, we will be exposed to foreign currency exchange risk and probably interest rate risk if we have taken any loan, or if we do have some deposits. Okay, we will be exposed to interest rate risk. Anyway, first of all, we will start with the chapter foreign exchange risk, forex. I would say foreign exchange risk management. Certainly, suppose the current India UAE exchange rate is rupees 24, around rupees 24 per AED. Okay, suppose let's take an example of a boy named X. His name is X, and his father is working in UAE. So his father is going to send him 5,000 AED every month. Okay, X receives 5,000 AED from his father every month. So what will happen to X? Whatever happens, X will get 5,000 dirhams from his father. Okay. Then my question is, what will happen to X if the rupees AED exchange rate went down? Because I say the Indian currency appreciates. Okay, if the Indian currency appreciate, if the Indian currency appreciate, it would become like 25 per AED. It will increase, no? Okay. Is this appreciation or depreciation? It's actually depreciation, not appreciation. It was my mistake. Suppose the Indian currency appreciate, which means we need to give only 23 rupees for 180. We need to give only 23 rupees per 180. My question is, will X get more money or less money? His father will send 5,000 AED. He's in India, right? So will he get more money or less money? Please comment. If the Indian currency appreciate and it becomes 23 rupees per AED, we need to give only 23 rupees for 1 dirham. Will X get more money or less money? X will definitely get less money only. Now it's 24 dirhams, no, 24 rupees per AED. If it becomes 23 rupees per AED, then he will receive only less money because his father will send only 5,000 dirhams. Then if it converted to Indian money, he will receive 23 rupees for 1 AED. Later, he had received 24 rupees per AED. Okay. Anyway, he will make definitely receive less money only. Okay. He will definitely receive less money because the rupees got appreciated. Okay. This is appreciation. Actually, the value went down, but this is appreciation because we need to give only nearly less money for 1 dirham. So this is in terms of rupees. This is appreciation, not depreciation. This is appreciation. Okay. Sometimes students get confused by the word appreciation, depreciation. Okay. Is it strengthening or weakening? Is it rupees strengthening or weakening here? It's 24 rupees. Then it becomes 23. It's went down to 23 rupees per ID. Is rupees strengthening or weakening? Kindly comment. Kindly comment, Ravin, Niranjana, anyone. Is Indian rupees strengthening or weakening? If it goes from 24 rupees to 23 rupees, say whether it is strengthening or weakening. Comment. See, even if it is wrong, don't bother. Just comment only. That's how you learn. It's Revin says it's weakening. It's not weakening actually. Rupees is strengthening because earlier we need to give 24 rupees for 180. To get 180, we need to give 24 rupees. Now our rupees are strengthened. We need to give only 23 rupees for 180. Okay, it's strengthening actually. It's appreciation, not depreciation. Okay, our rupees is getting stronger. Okay, it's strengthening. Stronger in a sense, we need to give only less money for 1 dirham. Suppose if we need to give 100 rupees for 1 dirham, our rupees will be like really what weak. Okay, because we need to give 100 rupees for 180. That's really weak, no? So it's simply this is simply strengthening. Okay, strengthening. Anyway, that's a start. That's a start to the subject. Anyway, let's discuss about risk. What are all the 3 types of risk? Please comment down the 3 types of foreign exchange risk which you need to learn in your reform. Anyone among the 3, please say. Please comment anyone among the 3 type of risk that you will be facing. That you will be facing. Please comment. What are all the 3 types of risk that we'll be facing? Transaction risk, very good. Niranjana, it's really good. It's transaction risk, then transaction risk, then translation risk, economic risk. Yeah, you guys are doing really nice. Okay, it's economic risk and it's transaction risk. Sorry, translation risk. Okay, I would give you a hint. Transaction risk is a kind of risk that will happen when we involve in a trade. Okay, commercial trade. If involved in a commercial trade to some other countries, then definitely transaction risk will be there. Okay, or else if we borrow or lend money to some other countries, definitely there may be transaction risk will be there. Okay, then what about economic risk? Economic risk is a kind of risk that will affect the economy as a whole. Okay, that is affected to the economy as well. Suppose some kind of war occurs. If we do have some asset in some other countries in which we get money, and sometimes if a war occurs in the other country, then it will affect our cash flow, right? It will affect our cash flow. Then it's called economic risk. It's affecting the economy as a whole. So economic risk is you can simply just looking at the scenario, you can simply say that this is something that happens in a wider perspective, not to our specific company, or it's something like and risk that is happening to a wider area. Anyway, that's economic risk. Then there is translation risk. Okay, translation risk is only an accounting risk. There is no cash flowing back. It's only an accounting risk. If we account the foreign currency, there is a probability that there is a risk occurring. There can be a risk occurring. So it's called translation risk. It cannot be there cannot be a cash flow impact. So translation risk is an accounting risk only. There won't be any cash flow impact. So there are three kind of risk: transaction risk, economic risk, and translation risk. So we need to reduce or eliminate all these risks. In FM, we are learning to reduce or eliminate transaction risk only. Only transaction risk we are trying to reduce the risk, or we are trying to eliminate the risk. Only transaction risk, not about economic risk or translation risk. We are reducing transaction risk only. Anyway, what is the name? What will we call the term? The term of the process in which we try to reduce or eliminate the risk. What is the term? Term of the process of eliminating or reducing the risk. We call a name for it. What is the name? Please comment. What will we call? What will we call the process of eliminating or reducing the risk? What is the method? Revin, can you say?
Sir, your voice not audible, sir.
Okay. I think there are some kind of okay. Actually, a call came, so that some network issues will be there. Anyway, now am I audible now, Revin? Okay. Then I'm asking, what is the name for the term which we used to use for the process of eliminating or reducing risk? What is the name of the term? Method. What is the name of the method called eliminating or reducing risk? It's not transaction risk. No, actually it's hedging. Hedging methods. Hedging means the process of reducing or eliminating risk. We are hedging only transaction risk, not economic risk, neither economic risk nor translation risk. In FM, we are hedging only transaction risk. Remember, that's a exam point actually. You need to understand that we are hedging only transaction risk, neither we don't hedge economic risk or translation risk in the paper financial management. Anyway, there are two kinds of hedging method in Forex, foreign exchange. There are two kinds of hedging method. What are the two kinds of hedging methods? Ravin, can you say? Or Niranjana? What are the two kinds of hedging method? Internal and external. Okay. There are two kinds of hedging method. One is internal method. Internal means we can do it in the company itself. Okay. We don't want the help of any other people. We can do it by ourselves. Okay. Actually, there is a comedy in there was a comedy scene in Malayalam movie. It's a movie called CID Musa, in which a guy tried to pull the car by his own. Then he would say, "I don't want anyone else to pull this car. I myself can pull this car." So it's something like that. Okay. Internal method is something like that. We don't want any other guys to help us. We can help ourselves. That's internal method. Okay, which we can do internally in the company itself. Okay, can you name? There are certainly 6 or 7 methods. Can you name any one internal method? Any one internal method? Okay. I want you to comment the internal methods you know. There are so many internal methods, so I want you to comment some of them. Invoicing in home currency. If we invoice in our home currency, we will definitely we'll definitely get we are not exposed to foreign exchange. So it's one of the hedging method, invoicing in home currency. But what will happen to matching receipts and payments? Okay, that's also an internal hedging method. Okay, my question is, what will happen if we invoice in home currency? What will happen if we invoice in home currency? What will happen if we invoice in home currency? The risk will be passed to the other party. Okay, if I am providing the bill to the other guy in my home currency, then he is responsible for translation. Okay, he is responsible for the translation. So my exposure to foreign currency risk will be reduced, but his exposure to foreign currency risk will be increased. Okay, So not eliminate. Okay, we can eliminate by invoicing in home currency. Okay, we can eliminate invoicing in home currency, but the foreign currency risk is transferred to the other guy. Okay, we can eliminate for our purpose, but the risk is transferred to the guy on the other side. Okay, the company on the other side. So it's bit difficult to invoice in home currency because whether they accept or not. It's a question whether they accept or not. Okay, that's an important question to ask. Anyhow, invoicing in a home currency is an internal method to reduce risk, uh, foreign currency risk. So as you said, there is another method called matching receipts and payments. Okay, matching receipts and payments. So we can also match receipts and payments. Suppose we need to give $1,000 to a company, and that company is giving should give $500 to us. Okay, it's one receipt to the other company, and the companies have one payment to our company. So we can match receipts and payments. Okay, we can net off and would give 500 to the other company only. So it's like that. Okay, we can match the receipts and payments. Anyway, matching asset and liability management. It's not in asset and liability management is not hedging method in forex. It's an hedging method in interest rate risk management, I would say. Matching assets and liabilities simply like matching receipts and payments. So can you name some other internal hedging methods? Leading and lagging. Okay, leading is an internal hedging method. Leading means we are leading payments. Okay, we are giving payments earlier. Making payments earlier is called leading. Okay, lagging is also an hedging method. Lagging is also an internal hedging method. We are lagging our payments. Then netting. Netting is an internal hedging method. So what's the difference between matching and netting? What's the difference between matching and netting? Can you say what is the difference between matching and netting? What is the difference between matching and netting? Matching is simply we are matching receipts and payments, but netting is also kind of matching where it is done in a group. Okay, there will be a parent company and subsidiary company. We can simply net off the transaction between those parent and subsidiary company. That is called netting. Okay, netting of the transactions around a parent in a group is called netting. Okay, anyway, there is another internal hedging method that is not a proper hedging method. If they ask, it's not a proper hedging method, but I would like to say it in the internal hedging method, do nothing. Okay, if you do nothing, at least the hedging cost will be reduced. Okay, the hedging cost will be reduced. It's a kind of method in which we can reduce the hedging cost. We need not do anything. The hedging cost will be reduced. That is do nothing. But if they ask us whether it's an hedging method, we should say it's not an hedging method. We can reduce the hedging method by doing nothing. At least the hedging cost will be saved. Anyhow, these all are the hedging methods. These all hedging methods, internal hedging methods, will be tested like a theory only. No calculation can be expected from this area. Okay, we cannot expect a calculation question from this area. Okay, earlier in 2012, 2013, they asked some questions in netting. Okay, no questions have been asked in matching, leading, lagging, netting, do nothing, invoicing, home currency, anything. Rather than theory questions. Okay, they will definitely ask theory questions regarding this, but there isn't any probability that a probability of a calculation question coming from this area. Anyhow, these all are the internal hedging method. There are certain external hedging method. External hedging method. Okay, there are 5 kind of external hedging method. So anyway, what do we mean by external hedging method? External hedging methods means we are hedging by the help of some external factors, external companies. It's like we can hedge using bank. One is bank and one is stock market. Okay, there are two kind of financial institutions, or I would say two authorities, either bank or stock market, which help us to reduce or eliminate risk. So what are the name given to? What are the name given to? The contracts in bank, which help us to reduce risk. What is the name used for the contracts? Okay, what is the name of the contract in bank? Not forward contract. Forward contract is only it's only an external hedging method. I am asking about what is the name for the external hedging methods that is done with the help of bank. It's called over-the-counter contracts. It's called OTC, over-the-counter contracts. If you are doing the external, if you are doing the hedging using bank, then it's called over-the-counter OTC. If you are doing it through stock market, then it is called ETC, exchange traded contracts. Okay, so there are 5 important external hedging methods which are done either through bank or through stock market. Okay, can you name them? What are the external hedging method? One you have already told, it's forward contract. You have already told it's forward contract. Okay, then next one, which are all the external hedging methods? One is definitely forward contract. Money market hedge is there. I would like to mention it in the 5th place. Money market hedge. Okay, then only forward contract and derivatives. Okay, what are the derivatives now? Please say which are all the derivative futures. Okay, futures, options, then swaps. Okay, these are the 5 types of external hedging methods which are done either through bank or stock market. Anyway, I would like to ask a question: which among the following 5 external hedging methods is used for long-term hedging? If you want to hedge for a long term, which among the 5 methods is the most useful? It's nothing but swaps. Swaps is used to hedge in a hedge for longer term. Okay, other all methods are used for shorter term only, comparatively shorter term. If you want to hedge for a longer period of time, then swap is the best option. Anyway, among these 5 methods, only 2 area will be tested as calculation. It is forward contract and money market hedge. These 2 areas, these 2 topics only will be tested uh, like a calculation question. Other 3 areas, futures, options, swaps, will be tested like a theory question only. Okay, only theory question will be asked from these 3 areas. Anyway, forward contract and money market hedge can be asked in a calculation question. Okay, forward contract is nothing but locking. It's a kind of locking a specific rate for a certain period. Okay, it's called forward contract. Okay, we are locking. Anyway, let me ask you one thing: whether do we have obligation in forward contract? Whether we do have obligation in forward contract? Is there any obligation? Is there obligation in forward contract? Like we should buy for this rate. Is there any like that? If is there any obligation in forward contract? Yes, there is an obligation. We must need to exchange in the specific rate. Okay, mentioned in the forward contract. It's a contract that will be with a bank. A contract with the bank in which we must be we do have an obligation that we must exchange with the specific rate. It's called forward contract. It's done through bank. Forward contract is done through bank, while futures, options, swaps, etc. are done through stock market. So forward contract is ETC, sorry, OTC, over the counter. It's over the counter. Okay, it's over the counter because it's done through bank. While futures are done through ETC, it's like a stock market. It's done through stock market. It's also like fixing a locking a specific rate, but it's done through stock market only. ETC. Options can be ETC and OTC. ETC and OTC. Is there any obligation in options? Could you please say, is there any obligation in options? No, there is no obligation in options. It's an option. We can either opt or else we can either exercise the option or else lapse. So there isn't any obligation. In forward, we do have obligation. In futures, we do have obligation. But in options, there is no obligation. But we do have the right. We do have the right, but there isn't any obligation. Okay. In options, there isn't any obligations. Okay. So it's options can be done through bank and stock market as well. It can be done through stock market, that is ETC, and it can be done through bank, that is OTC. Okay. So in options, we don't have obligation, but we do have the right to exchange, but we don't have the obligation. It's not like you must exchange by this rate. There isn't any obligation. We can either exercise or lapse the option. It's up to us. Okay. Then I would like to ask you a question. I would like to ask a true or false question. Okay. Just mention whether the statement I am making is true or false. Okay. So the statement is we need not pay premium if we lapse the option. We need not pay the premium if we lapse the option. Is it true or false? We need not pay the premium if we lapse the option we took. It's false. Okay. We should pay the premium if we participate in the option. Okay.